Good evening, everybody, and welcome to Alchemy Trades. This is Host Logic. Tonight, we're going to go over channels. This is going to happen within our defined range. We're going to use Nitromatic for this. Now, I get that TA and knowing some of this, if you're new to trading, and especially if you're new to trading, some of these technical analysis skills, some of the terminology just sounds overwhelming. If you're new to trading and you're new to bot trading, you're new to grid trading, then you add more of these kind of terms that you're hearing in the chat room. I get that it's overwhelming, but learn just the basics. You don't have to run a Fibonacci level on this. You don't have to run, your MACD crossovers or your 8 to 21, moving average crossovers. You don't have to get overly complicated. Because me personally, I like trading off of price. Because price action is really the best, most defined way to trade and know where something's at. I do like having my levels. I'm a big fan of having levels. I like my upper defined range and my lower defined range. It's not necessarily going to trade all the way down to it, as it's not going to necessarily trade all the way up to it. But this is its uppermost peak. This is its bottommost peak. It's not usually going to trade below this. It's not usually going to trade above this. But it's also not going to go straight to the bottom, straight to the top, straight to the bottom, straight to the top either. Especially with Nitro, and I love trading this. It's one of my favorite pairs to trade. As you see on my Twitter post, I post this quite often. But where channels are going to help you out are in these areas. This gives you an idea of what's happening within this small amount of time within your defined ceiling and floor. This just simply helps you get an idea of what's going on, and also to know both where to get into the trade when it's in this defined area and when to get out of a trade when it's in this defined area. So as market structure is breaking this channel right now, we've created a good channel. It's turning upwards quite nicely. We've gone from red to green, and we've got some good volume behind it as well too. The RSI is turning upward quite nicely as well. So we're in this channel here, and it's broken through this channel. Then it's a good idea that, okay, if I'm in this trade here, I started down here and I rode it up here. Once it's broken this small channel here, chances are it's now losing this momentum. It's changing direction. MACD's gone from a dark green to a light green, now to a red. So it's a good time to get out of this trade, capture any profit that you made, versus just staying into it over and over again. I like to come in here, get my 1 to 3%, 4%, whatever I can get out of Nitro is perfectly fine, because once I know it's broken market structure, I'm just not going to hold it until it comes back up here again. Why hold this for a full day when I can get out of it now, let it come back down, figure out where it wants to turn around again, get back into it, write it back up again. So that's personally how I like to do it. Another good reason to use channels are because if you're getting home, because like with Nitro and Matic, this is something that I wouldn't leave open 24 hours a day and run 3 or 4 days at a time. I personally wouldn't do that. Some people like to do it. Now, I have no problem trading something like, Matic USDC. Perfectly fine leaving a bot gunning for 2-3 days on that. Or with AVAX USDC, again, same thing. I have no problem leaving that running for a few days. But I don't think it's a good idea to do that on Nitro because it can be quite volatile. As we can see, it can make these drastic moves down and these drastic moves up. And this is quite a bit of percentage to gain and then lose. Now, if you're getting into something and you're trading it, of course, write it up as long as you want to. But usually, Nitro likes to trade within a range, and it likes to have these small channels within this range as well too. It's really important to know that these channels don't necessarily have to be very steep. They could be shallow. It doesn't matter. It's just giving you a defined market structure. Once it's broken the ceiling of this, now we know it's gone from dark red to light red to now green. It's broken the upper level of this channel here. It's most likely going to go back up now. So this really helps you kind of get an idea when you don't know what's to the right of you, what's going to happen here. It's easy to say this when you can see the whole picture, but when you don't know what's happening over here, this is a good way to kind of get an idea. Once it's broken this little structure here, it's time to get into it. Another good point is, again, we see that it respects the ceiling of this channel quite well. It respects the floor of this channel quite well. All the way until it gets to the very top peak, and we know we're not going to get anything more out of it. Time to close the trade, capture your profits, and then move on until it's come back down to get back into it again. A good point about this is if you know that you're getting in, you're just getting home, you don't want to just turn the bot on and jump right into it. Because if you would have gotten here, yeah, you would have made profit. You would have made about 1.4%. But knowing that it's trading in this channel, let it come back down to the bottom of that channel and then write it to the very top of it, you would have now had 2.3%. That was almost 0.75% of a difference of what you can capture by just having that little bit of patience, not jumping right into a trade and getting into it. I know people, when I say that it's overextended, they don't necessarily know what that means. We had a trade earlier, I think it was Joe and AVAX is what it was. And I said something was overextended and they didn't quite know what I was talking about. Well, when we know that it's hit the top of this area, it's not going to go much above this. It's pulled back. Yeah, there's still profit to get into it, but there's not a whole bunch of profit. If it's all the way up here and only has this much more to go, chances are you're not going to get too much out of it. So you've got to watch it really closely. Now, if you're going to move this and you're going to run this, if this was, let's say, Joe versus AVAX, again, that's probably something that I wouldn't leave necessarily open for days and days at a time because that's another volatile pair just on the AVAX network. But something like AVAX USDC, of course, run that for a few days and have a good time with it. But this is just really good to identify market structures. Once it's broken that structure and we know that this particular pair has exhausted itself, we've looked at RSI, we've looked at MACD, it's broken this structure, time to get out of it. And you define these channels, you could define them over and over again. You could delete the ones that have come and already passed. That way your chart doesn't get too over cluttered, because having a cluttered chart really doesn't help you very well. That's why I don't use a lot of indicators. Anytime you see any of my TAs or when I call things out, I don't have a whole lot going on in the chart simply because that. We can see here again, it's had this nice upward channel for a while. It's broken it. It's still closed within it, so we don't quite know what's happening yet on it. Until it's had some closes below this channel and we know it's losing momentum, that's when I might go ahead and say, okay, I'm going to get out of this trade. It's broken this channel. We don't quite know what's going to happen. But I always want to make sure I get that full candle close above it or below it before I decide to get in or out of anything. And again, a really good idea to know, if I'm in a channel, I'm in this trade, and I don't see what's going on over here, I'm going to wait until it comes back down again, get into it, and then continue to write it up. You're just going to capture that 0.75%, 0.5% more profit. So I hope this helps, guys. I know there's a lot to learn when it comes to TA. I know there's a lot of skill that's involved in it, but keep things as simple as you can. Keep some defined ranges. Use a couple of indicators. Again, you're not going to trade exactly like I do. I'm not going to trade exactly like somebody else does. But with these things, as you learn one more skill and another skill, and you practice, if you're new to it, throw in $100 on one particular network and trade your heart out and get some knowledge, get some skills, get some practice in, get some experience in. And then as you get better, and as if you've done this more and more times, you're going to be a lot better when you're on your 200 trade than you were on your 50th trade. So literally trade over and over and over again. Get an idea of it. If you don't want to use real money with the bot, simply put a marker up here where you think it's going to go next and see if you're right. Check again later on and see if you're correct. But these are some skills that you're going to be able to develop as time goes on and get an idea of what's happening, and you're going to get a lot better at it. You don't always want to just start a bot to have a bot running per se. Unless you're going to get in and run that thing for a week straight, you want to get in the right time and in the right space within that area. Hope it helps, everybody. You guys have a great night. I wanted to thank you all for your support. I really do appreciate it. I mean, I appreciate all the kind comments that you guys have posted on Twitter and on YouTube, so I do appreciate that. If you guys want any particular TA covered, you want me to cover a topic, let me know. Just shoot me a direct message or holler at me in the chat room in Alchemy and let me know, hey, can you cover this particular item, or just simply ask a question. I'm always glad to help anybody out anytime I can. Thanks, guys. Have a good night.